Well, that's the day two of the Auto Expo. The big tech numbers today. Infosys reporting a beat on its top line in Q3. Margins were a slight miss. However, the biggest takeaway is that the company has revised its FY23 revenue growth guidance higher from 15 to 16% to 16 to 16.5%. Reema is here with the details. Strong showing there from Infosys. Reema.
Infosys is a beat. The revenue growth has come in at 2.2% higher in dollar terms. Constant currency revenue growth at 2.4% ahead of consensus expectation and ahead of its closest peer TCS as well. Margins are a bit of a miss because margins are flat on a sequential basis at 21.5%. So the benefit of rupee appreciation has not reflected in the company's margins. The street was working with a margin expansion. The big positive is the deal wins. Deal wins at $3.3 billion compares with $2.7 billion in the prior quarter and the best that we've seen in the last 8 quarters. And one of the reasons is vendor consolidation and the company winning market share when it comes to vendor consolidation. The revenue guidance for the full year has increased. The earlier guidance was 15 to 16%. It now stands at 16 to 16.5%, which means an upward revision of 75 basis points at the midpoint. And this roughly assumes about a 3.5% revenue growth in Q4, which means Q4 growth is going to be solid as well. The margin guidance for the full year remains unchanged at 21 to 22%. So overall, as I said, revenues beat, deal wins strong. FY23 revenue guidance has been upgraded, coming in as a positive surprise. And attrition too has ticked down by nearly 300 basis points. What would be the misses in the numbers? Margins, as I said, margins are flat. The street was hoping for some margin improvement. We saw margin improvement in the case of TCS as well. That's not played out. 2, the financial sector, or BFSI as it's called, has grown slower than the company average. BFSI's revenue growth this quarter stands at 5.5% on a year-on-year basis, which compares with the 13.5% growth that the company has reported. It basically means the financial sector has seen a bit of a degrowth in Q3, and that is a bit of a miss. And hiring numbers are also fairly muted at 1,600. It's not a decline in the headcount, as in the case of TCS, but it's still a muted hiring number of 1,600 employees. This is the lowest that we've seen in the last couple of quarters.